Hi, I'm Wade Hansen. I've been selling luxury real estate in Minnesota and Wisconsin for over 23 years. My entire career has been spent protecting my clients from misinformation and unethical practices by those not looking out for their best interests. This podcast will give you the raw truth about everything real estate so you can make solid, informed decisions about the biggest investment of your lifetime. This is the Raw Real Estate Podcast. So before we get started, just give me a little bit of background on how long you've been in the business, how you got started. Just tell me your story a little bit.
Cool. So I got in the mortgage industry going on almost 17 years ago, and I had to do a career change, as you know, because I got into a really bad motorcycle accident. So, right now I'm 42 years old. So if we backtrack 17 years, I was 25 years old, and I was a little wild, and you could like to say that I lived my life in the fast lane. Mm-hmm. I liked fast cars, fast boats, horsepower, just living my life fast, not always with wise decisions, but extremely fast. And that, came to bite me when June 12, 2004, I was driving a crotch rock at 155 miles an hour and went over the top of a hill. Ended up, from what I believe, because I don't recall everything, that I jumped the top of a hill, and when I landed, I got what's called head shake, where the front end of your bike shakes, and I dumped the bike on the ground. I slid across the asphalt. I hit a tree 6 feet in the air. It ended up breaking that tree in half. I spun around, and I hit a driveway culvert. The driveway culvert cut my right leg off just below the knee. And I ended up launching in the air, about 15 feet in the air, 75 feet forward into someone's front yard. And I was super fortunate that a couple of people happened to be driving by at that time. Mm-hmm. And one of the people that stopped was a former first responder. So that worked out by the grace of God for me on that. And I thought I was in the middle of a cornfield. I started crawling through what I believed was weeds, and it was actually the ditch. So I thought I was crawling to where I could hear people talking, and it was really just me crawling across, some ditch weeds, and I had to stand up to get their attention because I thought they couldn't see me because I thought I was hundreds of yards out into this cornfield. So I went to step up on my left leg, and that's when I learned my left leg was broken. And I stepped down and my right leg was gone. And I had to step on the stub of my right leg. My left leg folded over, and I fell back. And I looked down on my right leg, and the best way to explain it would be like seeing shoestrings come out of your leg. And what that was my ligaments. Wow. So I grabbed onto my thigh as like self-tourniqueting. And when I would do that, it would go from black and white to color. And at the same time, the couple people that were driving by came down, and they tourniqueted my leg with their belts. They took off their shirts and applied pressure on my limb and just kind of stabilized me while they called 911. So the paramedics came. They ended up using a fire hook to get my leg out from underneath the driveway culvert. It was 15 feet inside. That's how fast I was going. That my leg kept going and I kept going. So they packed my limb, what was left, on ice, and shipped me off to Regions Hospital, which was about a half-hour drive away. So I ended up getting intubated on the way. Wow. I thought I died. Yeah. And and as you can imagine, at that time I'm screaming, I'm gonna die. Like this couldn't be any worse of a situation to possibly, or traumatic of a situation to go through at that time. So they intubated me, put me under. I saw the light. I thought I was dead. Honestly, I said goodbye to my family, and I came to a couple of days later at Regions Hospital. And my family and friends, there was 30 people in the ER waiting for me. And, obviously after like 12 hours of surgeries, they stabilized me, took me out of a coma. And when I woke up, it was like the beginning of my new life. So it was the next chapter of Andy Burton, and where are you going to go and what are you going to do with your life? So it was a long recovery. Took me about a year to get back to being a functioning adult, because I had to learn how to roll over in bed, sit up. I had to eventually work my way to a electric wheelchair, normal wheelchair. And then I got a prosthetic leg, and they taught me how to walk again. And so I went from a walker to crutches to a cane. So there was a long journey. And all of this ties into who I am, like within the mortgage industry, right? Because it just changed me to my core, of who I was as an individual. And it literally, the day that I came off of crutches, because I had broken my left leg again, I started in the mortgage industry. So I started networking even the summer after the accident in a wheelchair. Never forget this, talking to some friends saying, I want to be potentially a realtor, right? Actually.
You made the right choice.
Yeah. And the reason why I didn't become a realtor was I couldn't walk very well.
Sure.
And I envisioned I have to walk through yards and people's homes and up and down stairs, and I had very low confidence in walking at that time. But I thought, you know what? I can sit at a desk and give people advice and on mortgages, which I knew absolutely nothing about. I didn't even own a home myself, so it's pretty funny. Of you bringing up people getting bad advice in mortgage and real estate. We all have to start somewhere, right? And so I started from ground zero. And in that time, I ended up networking with a friend. They introduced me to the mortgage industry. And a little over a year after I got into the accident is when I actually started in the mortgage industry. And, now we're talking about 2005, 2006. And that's when I originally started originating loans. And I got no training whatsoever. So imagine that you're advising someone, much like realtors, you're advising someone on how to make the most important, potentially for them, a biggest financial transaction of their whole life, and you have no idea what you're doing. That was me, right? Yeah. So stumbling my way through it and learning along the way.
Sure.
So I have a unique and different story of getting to the point of starting to help give people financial advice.
I'd never heard the whole story. So that's thank you for sharing that. That's quite the story. Now take me fast forward now, 17 years later, you run a huge mortgage business. You're one of the top lenders, I think, in the country for Waterstone Mortgage. Just tell me a little bit about your business now.
Cool. So 17 years later, I have a team. There's 8 of us that all work together. In terms of purchase business where you work, we're definitely at a top 3 loan officer in the state of Minnesota. Top 1,000 in the United States. So we originate a lot of loans. In the last 12 months, we closed right around 400 for about $125 million. In context, the average loan officer closes 3 or 4 loans a month. Yeah. So we're helping a lot of clients, and one of the biggest reasons we're able to do that is everything that I learned through going through this accident. Yeah. So.
Yeah, I know you've taken over some of my files that have gone south, and you've saved them, brought them to closing. So I know you're really good at what you do. Tell me a little bit about just give me the process involved in getting a mortgage. Just start from the very beginning. If I'm somebody that wants to go out and get a mortgage, what's the process? What criteria are you looking for? How hard is it? Should I just hop online into Rocket Mortgage and just enter my information? What should I do?
Cool, great question. So I can tell you how we do it. So we like to say that we deliver a personalized mortgage experience through good communication, financial coaching, and always closing the loan on time. So it's really important to understand that. So that we are a group of advisors. We are not the online click a button, get a mortgage. Because reality is when you're buying a home, that doesn't really work very well. Those companies, what most people don't realize, they're 95% refinance. So when you do that, they don't understand how to manage a process. So it's very process driven, but with a personal touch, which is really important. So for our team, typically it starts off with a conversation, a handoff from a past client, a return client, from a referral partner that they're calling into our office, and we're usually doing a credit application either over the phone or we're helping them do the application online. And in today's COVID world, our consultations are almost exclusively on Zoom. So what ends up happening is we do the application up front. We provide a list of paperwork that we need because we want to be able to give them a definitive, upfront, clear answers on pre-approvals and questions. So we need all of their documentation like W-2s, pay stubs, bank statements, tax returns. And we do a Zoom meeting together. It's, I would say in our team, about 90% of the meetings are done with me. So where I'm at my office, the cool part about Zoom is one of them can be at work and one of them can be at home. And it really offers some really great flexibility for them. So we typically take anywhere from 45 minutes to an hour where we review their goals. We go over the process of buying a home, from credit application all the way through getting pre-approved to making an offer on a home. What's that going to look like in today's world of multiple offers? Getting their offer accepted, walking them through every step of the way on the financial process, and then going over their pre-approval in depth. The most important part of a pre-approval is actually verifying all documentation, which is what a lot of online lenders, I keep bringing up online because it's a common thing that happens in today's world. It seems to me that about 25% of all people start online without talking to anyone. So they end up getting a letter that just gets generated and is not verified. And as you know, from being a big listing agent, that's a problem, right? Because a lot of the times information, they verify nothing. They just trust what the information is that's entered online. That's the exact opposite. So we have a high barrier of entry. We want all of your documentation. So then we literally have like a 99% success rate when we give the client a pre-approval and we've gone over their financial options, right? So we're going over what's their down payment, what's their monthly payment going to be, approximate interest rates and closing cost package, what type of house are they going to buy, and how does that affect their payment or down payment. And then we're generating what we call our prescription for pre-approval, or a letter that we deliver directly to the agents so they can go out and start looking at homes.
Yeah, you brought up an interesting point. So 25% start online, you feel?
It's
interesting.
It's interesting. I want that industry verified, but it seems like that from my experience.
And you touched on multiple offer situations, and as a listing agent, I've said this before, right? If I have 5 offers in front of me and one of those has that online verification, well, oftentimes we'll just slide that offer aside and focus on the other 4, right? I mean, we really look strongly at the good quality pre-approval and good quality lender, right? That's a really important part of the process. So some basic questions that I get asked a lot, and I know these are probably basic to you, is do I need 10% down? What's the difference between FHA and conventional? Maybe you can answer some of those questions just to kind of educate the average buyer out there.
Yeah, I would say the biggest misconception is down payment for a mortgage. Because when you go online, you can't find any answers.
Yeah.
Right? Like, so you just see different products available. In the state of Minnesota, you have products ranging from MHFA, which is 0 down for low to moderate income borrowers. What's most common is starting at 3% down for a first-time home buyer in a conventional mortgage to 5%. That's pretty typical. It's somewhere between 3 and 5% down. Now, in the last 12 months, this market hasn't been forgiving with people with low down payment. We're seeing a little bit of that changing right now. But it's 3 to 5% down for a first-time home buyer, cash out of pocket, which can be a gift, sourced from their own funds, retirement account. So big difference between conventional and FHA. Typically, FHA is driven more towards moderate credit, or there was an issue at some point in time in their life that they had like a foreclosure, bankruptcy, or maybe like pretty low credit, high debt to income ratios. There's a lot of reasons why though too. Like, so we can't always put down people that are qualifying for an FHA loan, especially in today's world. You can buy a house up to about $415,000, I think, on an FHA loan with only 3.5% down. And for Waterstone, we can go down to a 580 credit score. So you don't have to have a very high credit score and still get really good rates too.
And what are the things you're looking at besides credit score? Debt to income ratio, credit score. What are some 2 or 3 key factors that you look at for the approval process?
So we start off with 2 years history for employment, and then you're going to be looking at credit score. So each borrower is typically going to have all 3 credit reporting agencies. We use the middle of the scores, not an average. And then we're looking at debt to income ratio on stable income.
Okay. So if I'm going to buy a house in the next 12 months, what is one thing I should not do in the next 12 months?
I'd be limiting the amount of debt that you're going into, specifically credit card debt.
Okay.
So most people aren't aware that you want to keep the typical credit card under 30% of the high credit limit. So you could have a smaller credit card, like a $500 card with a $300 balance, and it could be lowering if you have moderate credit, medium, kind of mediocre credit. That could drop your score 40 points. The difference between having $100 on the credit card and $300 on a $500 card.
Wow.
People are really surprised by that. So it's being really careful on debt to high credit limit on credit cards.
Interesting. So in the real estate industry, we recommend that sellers interview 3 agents. That's just my recommendation. I think you should sit down with 3 people, find somebody that you trust, somebody that you like, and somebody that understands your local market. Okay. In the mortgage industry, I always hear I shouldn't talk to 3 lenders because if I fill out 3 loan applications, I don't want my credit to be checked 3 different times. Tell me about things I should consider when I'm looking for a lender and what I should do as a consumer.
If you're shopping for a mortgage within 30 days, it's typically not going to lower your credit score. So that part of it isn't so much of an issue. Also, when you inquire on your credit, it only lasts for 120 days total. So you could go out and pull your credit 20 times, and in 121 days, all of those inquiries are gone. I think that's something that most people don't realize. So I'm all for people shopping for multiple lenders, but usually what we end up seeing for us personally, we actually advise them and sit down and give them time. So we end up winning over the client, not because of having the lowest rate, but of building trust and confidence in them that we're going to be able to advise them and give them what's best for them versus what's the lowest rate, because lowest rate isn't always the best option for you.
How quick can you close loans these days?
15 days.
Wow.
Yeah, it's pretty realistic.
That's crazy.
Yeah.
That's underwriting appraisal. That's from the time I fill out an application to the time that I get the keys to my house, 15 days.
Yep.
Wow.
We just closed, to close 26 days on a $1.9 million house.
Wow.
Where we were the second opinion. And we closed them last week. So we can still do loans pretty quick.
That's crazy. What do you see happening with interest rates? So that's the big topic, right? I mean, interest rates have been at a record low now for like 2 years, and it's driven this market, and I think this market has gone crazy because of its affordability's super in a super good spot right now. What do you see happening, just in your opinion, with interest rates over the next 6 months?
Well, if I truly knew, I probably wouldn't be here.
Yeah,
right?
well, neither one of us would, right?
Yeah, I'd be a day trader
right.
making millions and millions of dollars.
Right.
I think it's a safe to say prediction that they're going to go up, right, from where they're at right now. So the Federal Reserve right now is tapering back the purchases of mortgage-backed securities. The more mortgage-backed securities they buy, it's called quantitative easing, and it pulls rates down. So that's what they did immediately after COVID, right? Or immediately when COVID really broke out, they started buying mortgage-backed securities like crazy. But they're slowly tapering. I believe it's around 10% per month right now. So they're moderately pulling back. They're very careful on not having what happened in 2013, which was called the taper tantrum, where in 90 days, interest rates went up 1.5%, which slowed the market down a lot. So they're making sure that that's not happening this time around. So they're extremely careful. So what does that mean? I think rates are going to moderately rise. I don't think we're going to be in a run up of rates. If I had to guess, I think the top end of rates in the next 6 months is a 0.5 point of where they're at right now.
Okay, and where are they at right now?
Low 3s.
And you think they'll be maybe mid to high 3s? Okay.
I think that'd be the top end.
Okay. And in my opinion, I think that's probably okay. I think that will soften appreciation on homes a little bit and make the buying process not quite as chaotic and not as many bidding wars. I think we'll see more inventory. Would you agree with these statements? And I think that will open up opportunities for more buyers. So I don't think that's necessarily a bad thing. Do you?
No, because the key part of rates is affordability. And with inflation, as we're experiencing right now, I think just about everybody's seeing that, comes wage inflation, meaning you make more money this year than you did last year. So if interest rates go up a little bit, more than likely your income has actually increased even more than the impact on monthly mortgage payments. So that's a huge key factor, that rate and wage is super important to be able to take into consideration.
Sure.
Yeah, because that's your key for affordability.
Yeah. Good point. So I want to switch gears a little bit. Just tell me one thing you wish the consumer knew about your business. Like for me, for instance, I wish they knew how freaking hard we worked. I mean, these top 5% of the agents, I mean, we work our tails off, right? We're working 24/7, 365, holidays, weekends, whatever it is. I'm not sure the consumer realizes that we're not all the same and that we work really, really hard. So if there's one thing that you wish they knew about your particular industry, what would that be?
So our industry or me in general?
Just either one, your industry. You know, I mean, everybody I think thinks that it's just all you lenders are the same. You go online, you fill out an application, they're going to get the same rate wherever they go, the same experience anywhere they go. What's one thing you wish they knew about you, your industry, and how you perform within the industry?
So I think the biggest thing that people need to understand is the difference between a local advisor and a do-it-yourself mortgage. So do-it-yourself mortgage is online, meaning like you have to figure it all. I'm going to pick on Better.com. So Better.com has had the biggest growth like out of any mortgage company probably in the last 3 years, but it is a do-it-yourself mortgage. Better.com originates 96% in refinances though, and people don't realize that. So 4% of their business is purchase. It's the cheapest rate. No one can touch it, but it's do-it-yourself. If you have a problem, much like if you pay someone $395 to list your house on the MLS, right, as a for sale by owner, it seems great, you know, but the big, huge problem, if there is any problem at all, any hiccup whatsoever, you have zero guidance, right? And it turns into an absolute train wreck. So for us, it's the local advisor, the local individual that's a specialist in their industry that understands finance and being able to make sure you could be getting a really great rate, the best fees, but it's the wrong product, right? Like, so it's not even the right option you should have explored.
Sure.
There's a huge thing that's happened in the last 3 years is the amount of equity, especially on move-up buyers. They have an opportunity where it's not uncommon where you see someone bought a house 3 years ago and they're selling it for $100,000 more. So is it really smart when you move up to put all that money into the next home? So as an advisor, we're looking at that sometimes as saying, hey, you got a little bit of credit card debt, you got a little bit of student loan debt. Maybe you should harvest $30,000 of that equity, pay off all that debt. You're saving $1,500 a month in payments and helping you move up. Like, so it's someone who actually takes the time, and a robot can't do that. Rocket can't do that, right? They cannot advise someone. It's much like you going in. And I'm going to pick on Zillow right now. So Zillow would be the robot of the real estate industry. They totally screwed up. So, and what we're talking about is Zillow was using their automated values to buy real estate, and they overpaying. They used the example of Arizona up to $65,000 for properties. So the robot was wrong, right? And it's the same idea that it takes an individual advisor like you going in. I know what you do on real estate. Well, you'll go in and say, hey, you need to paint the cabinets in your kitchen. You need to paint these walls. You need to rearrange your furniture. And if you do that, I'm going to get you $50,000 more for your house, and it costs you $5,000 to do it. Same thing for us. We look at it and say, hey, if you pay off that credit card, like that small balance we talked about, $300, all of a sudden you're going to save $100 a month on your mortgage. Right? So if someone actually taking the time to advise someone as a local advisor versus, you know, an online robot.
And I think to elaborate on that, we're problem solvers, right? A robot can't solve that problem. Things come up in transactions, and you and I, having the experience we have in our respective industries, we've been through most of these problems before. We know how to resolve them and get to the finish line, right? Computer just can't do that. So I think that's a great point, and I think everybody's in fear of these robots and these Better.coms and these Zillows taking over the mortgage and real estate industry, and I just don't think that will ever happen because of exactly what you just said.
Well, to give you perspective, the mortgage industry is so fragmented that the number one player in the mortgage industry is Rocket Mortgage, okay, Quicken Home Loans. So they have 4% market share.
Wow.
Yeah,
they're number one.
They're number one, 4%.
That's crazy.
So I'm not really that worried about it.
Right.
Yeah, so.
Interesting. So you work with a lot of realtors, I know that. Obviously doing 400 and some odd transactions a year. You're not working with just one agent. Just be real with me and tell me what you think separates a good agent from a great agent. You don't have to name names. You don't have to be specific. What do you think separates a good agent from a great agent in this market?
Excellence in negotiation would probably be like number one.
Okay.
Master negotiator.
Yeah. With
your client and with people making offers. That seems to me from the outside. And I would say communication, number two. like realtors is just terrible.
They're awful. They're awful. Yeah, that's why we're sitting here talking. That's why my podcast was launched. I think the industry is terrible right now. I think it's in a bad spot. So I would agree.
Well, that's because also I don't know, even in the state of Minnesota, how many people have gotten in the real estate industry for licensed realtors. It's crazy, right? Like, has it gone up 25%?
It's a record. The National Association of Realtors and the Minnesota Association of Realtors broke a record this year with the most licensees they've ever had. Ever.
Yeah, just like I talked about 17 years ago. I had no idea what I was doing.
Yeah.
That's your competition, right?
Yep. Yep.
So they could be ill-advising someone and you lose a client to them because they just told them the wrong stuff.
Yeah, and it feels you talk about negotiations, it feels like we're not negotiating anymore. It feels like we're just trying to do whatever it takes to get the buyer into the house, and sometimes that's not in their best interest, right? I think just the waiving of inspections, the giving away our firstborn and blood samples and everything else just to get a house. I didn't understand that. I think that's softening and changing a bit. You kind of touched on that a little bit, but I'm glad you brought up negotiating because it's an art and it's something that most agents just don't have. Yeah,
and if we're talking in terms of who sells the most houses, it's usually going to be driven around who's the best at systematically managing relationships, right? Who has the biggest database of relationships and they properly manage them. I think that's a really, really important thing on the sales side. The consumer doesn't see that as much.
Yeah.
But in order for you to drive leads to get listings, which bring in buyers and then get more listings, right? It's how do you systematically approach managing your relationships? Because it can't haphazardly happen.
It's definitely a relationship business, right? Again, going back to the online robots, they don't develop any relationships, and I think it's just a very short-term approach. So if you were to change one thing about whether it's the real estate industry, the mortgage industry, there's a lot of things I would change, and I could go on and on, but if you were to change one thing about our industry, what would that be?
I kind of look at our industries, we're together, but we're separate, right? I think if there was a higher barrier of entry, that would be helpful.
Thank you.
Right? But I say that with me saying I came in with no experience. Yeah. I didn't even have to take a test. The mortgage industry entirely changed. So the mortgage industry has tightened things up quite a bit with the continuing education and the licensing. And 17 years ago, it was like you just showed up at a company and they gave you a card and said, go sell mortgages, right? Yeah. So it's a barrier of entry. At the same time, me as a salesperson, it's really nice when people have low barrier of entry, and then I look really good when people compare me to the average.
Yeah.
So
I think that's a fantastic point. I, too, I'm a college dropout. I got into it in 1999, walking out of college. Never looked back. But yeah, they've never changed since 1999. The barrier of entry probably has gotten easier in my business. You can do it online. We used to have to show up in person to take the test and so on. A lot of that has changed, and I always joke. So love my daughter, love my wife. My wife was a hairstylist. I think yours was too, right? For 25 years, my wife was. My daughter's now going to beauty school, right? She has to go to 16 months of beauty school and spend, I won't say how much, to cut hair. I went to 3 weeks of real estate school for a couple $1,000, and I'm handling the largest investment of anybody's lifetime. I think that is, and we're both managed by the Minnesota Department of Commerce. Okay, I think it's crazy to me that hasn't changed over the last 25 years. So I think you brought up a good point, and something needs to change. I don't know that it ever will, because I think that our industry is driven by how many bodies they can get in and pay fees, and hence that raises salaries for the CEO of the Minnesota Association of Realtors and the National Association of Realtors, and probably listening to this, but at the end of the day, I think that needs to change. So.
You're right. I believe it's harder to become a manager, to be an independent hairstylist. I think they're called managers. My wife would not like if I didn't know, but I believe they're called managers. So they get their hairstylist license, and then to go independent, they have to have a manager, and they have to have a certain amount of hours worked. Someone has to sign off that they did work. They got to take a test, like all of it. I think mortgage managers have no requirements, and it's probably easier to become a broker for a real estate company than it is to become a manager in the hair industry, which is entirely wrong.
It's sad. It's very sad, but it's true, and it's been frustrating, I think, for both of us, right? If you were to give one piece of advice to somebody that's buying or selling a home, I know you've been through the process quite a few times in the last 4 or 5 years, so you're very experienced in buying and selling a home. If you just give them a piece of advice, what would that be?
So if you're a first-time home buyer, you have to buy when it's right for you. The market doesn't matter. Like, you have to buy when your finances are in order, versus worried about getting in. I hear that term lately, and I'm like, I don't like that term, right? So this is going to be one of the most important transactions of your life. It's a really driven by like a lifestyle choice, and you have to do it when you're ready. Don't feel the pressure from others saying that they bought a home. I didn't buy my first home until I was 30, right? So the average first-time home buyer right now is 32 years old. They're old. It's older than people realize, right? So take the time to make sure that you have enough money set aside in reserves that if there is a problem, you're not gonna lose your home, right? And you have enough money for a down payment and reserves so you can be a responsible homeowner and build wealth and live that American dream versus being stuck with a payment you can't afford long term.
Yeah. And then getting in, I think that's what drove our market a lot this last year, in my opinion. I brought this up before, but that whole fear of missing out, right? Everybody hears, well, rates are low, and the media is reporting how hot the real estate market is. If I don't get in now, I'm going to miss this tremendous opportunity. And I think that whole fear of missing out and just wanting to get in because everybody else is in the game, buyers made some bad decisions, in my opinion. So that remains to be seen. We'll see. But
there's definitely a group of people that overpaid.
Yep.
Yeah, not the majority.
Yep.
But there's a small sliver.
Yep. No, I agree. Yeah, I agree. If you were to change anything about your 17 years in this business, is there anything that you would have, in your experience, you would have changed, done differently, looking back on your career?
I would have hired a coach and a mentor earlier on in my career. So.
And you have one now?
Yes. I would have gotten an industry-specific sales coach and mentor earlier on and made sure I aligned myself with people that are at where I wanted to go earlier. Because I think that is one of the key reasons for my success, was having an outside person that guided me to make smart business decisions to build my team.
So I like to study success, leadership, achievements of other people. I read a lot, so do you, I know that. If you were to give just one bit of business advice, you've created a really successful business for yourself, obviously. If you were to give one piece of business advice to your son, for instance, I know you just had, what's your son, 2 years old now?
Yeah, it's 2.5.
2.5 years old.
Yep.
What would that be? Or
wow, that's a big question.
Just life advice.
Yeah, life advice. I'm living it through my own unique set of lenses, right? Looking at it. And if there's one piece of advice, is contentment versus complacency. Being grateful, gracious for where you're at right now. And but knowing that you can always become better. Like, I have this, it's something I've been working on for quite a while, that I always want to grow and be bigger, and I'm obsessed with like business and winning, but just, being really, really aware. We lost multiple family members in the last year, and it just really caused me to slow down and realize, like, in the moment is important, and that might be me at 42 versus me at 32.
Sure.
Right, or especially at 22, is just realize and be happy with what you have right now, and you can still be better.
That's great advice. Last but not least, if someone wants to speak to you about getting approved, or reach out to you or contact you about getting a mortgage, where's the best place for them to start?
They can start on our website, AndyBurton.biz.
Okay, and we'll post a link to that online as well. So
cool.
Appreciate you being here. Super, super helpful. Some good information. Probably like to have you back at some point, talk a little bit more about just you, your story, what you've been through. I hadn't had an opportunity to hear that whole thing, so I'd love to elaborate on that a little bit next time.
I'd love to.
Appreciate it.
Sounds good.
Thanks.
Thank you.
Thank you for listening to the Raw Real Estate Podcast. If you have any feedback for this episode, or want to suggest a future topic or even possible guests, head to wadehansen.com. There you can get links to my Facebook and LinkedIn pages. And don't forget to subscribe to my YouTube channel to see the video version of this podcast too. Again, thank you for listening to the Raw Real Estate Podcast. We'll talk soon.